Hi everyone, Adrian Player here. We're going to be talking about commercial today, and we are going to be talking about security. So we're going to be talking about caveats, we're going to be talking about GSAs on trading businesses and director guarantees. What are these things? Well, in commercial, banks want to offset their risk. So when they look at a deal and they look at you and what you want to do, they do a risk assessment and then they want to make a premium on the deal. And then from there, they want to look at where the risk is in on a deal and how can they reduce their risk. And if you find ways to reduce the risk, or you find a banker that likes dealing with things out of the box and thinking about many different things, then you can get a deal across the line that many other resi brokers and normal brokers don't know how to do. So I'll give you an example. So I'm dealing with a client right now, and I'll change enough of the information so it's not specific to that client. But in a nutshell, they've got a trading business, right? And it's sitting with a big four bank, and they've got all their business banking there. They've got their owner-occ there, and they've got a commercial property there. Now, it's a mixed use commercial building. What is mixed use? It is commercial on the back of a 3-bedroom resi house, and then there's a commercial section at the back, right? So as soon as you say mixed use, a lot of these lenders start thinking about the word specialized security. It's a fancy way of saying that it's a non-common asset, so lenders want to take less risk. How do they take less risk? Well, they reduce your LVR. So instead of you being able to get 60, 70, 80% LVR, it might be down to 50 or 55% LVR. So I'm dealing with a client right now where we're going through these kind of steps, and they want us to uncross the owner-occ from this mixed use commercial property. So they've got an owner-occ that they're living in, and then they've got a second property with a 3-bedroom house on one side and a commercial property on the back. So in these kind of situations, one, we've got to check that the borrowing power is high enough to do what they want. Two, we've got to figure out everything to do with their self-employed business. Are the tax returns lodged? Are they GST registered? What are the structures of all their entities? Are they companies, partnerships, sole traders? They're running multiple businesses. One is an import and export business. Who is the owners? Because there is a company and there's also a strategic partnership where they own a percentage of. So we needed to get that. Then we needed to get the addresses together, and then I needed to write it up in a way where I was like, okay, so here's the overall deal. We've got a lot of excess equity sitting across these properties. Here are the problems that I can see, and then I notified the lenders surrounding the mixed use property. Then we talked a little bit about the commercial property on the back. What is the lease? Is it month to month? What is the term? What is the business on there? Are they willing to sign another lease? Then we had to have a look at the lease to figure out is there outgoings off the back of the lease, or is it a net lease? Then we needed to figure out borrowing power wise across the owner-occ and the mixed use property. So we had to figure out how much borrowing power did they have. Then I needed to figure out, well, if that 3-bedroom house was by itself, what do they think the value was? They wanted to value it like a normal house, and I said that's not how a lot of lenders would look at it, because it's got the commercial on the back, so most likely they'd look at it very similar to the value of a 3-bedroom townhouse. So then we titrated it down on that. Then we looked at the commercial on the back, and I said, well, if that was a net lease, it would probably be worth this. If it was a gross lease with certain outgoings, we may potentially be able to sign a new lease for them, and then that's going to make you look a little bit better for the commercial. And then when we're dealing with the banks and we're going to be moving them across to, then we've got to be talking in the realm of things like, how do we reduce the bank's risk? Well, they wanted to do one, two, or three things. So I told them a bank is much more willing to say yes to one or two things, not three or four things. So do it in two stages, get the first two done, and then we can figure out the rest later. So that's the first thing. Second thing is, if you're willing to bring all of your business over and they see all of the security, then, and they give the director guarantees, the trading entity guarantees, the GSAs, everything, and they also bring their trading business across, then the bank sees everything, they control everything, and they're much more willing to do more things with that than they are willing to do if you only brought over one of the properties or tried to piece it out. So these are some of the things that you've got to be thinking about with commercial that a lot of people don't. And also you have to know which lenders that you should be going towards, because I'm a premium broker in a lot of these lenders. You don't want to be sending these kind of transactions to a junior banker that isn't willing to go through all of this complexity or receive a lot of documents, use that as a starting position, and then start making suggestions on different parts of the profile and potentially ways that we can massage this in, or we could change that, or we could do it this way and potentially get a deal across the line. So this particular client had gone through multiple brokers before they sat down with me, and they said multiple times through the call they're not used to dealing with a broker that speaks like me. Now, I think a lot of people are used to brokers just sitting there and talking about lenders and fees and rates, when if you're in the commercial space, especially the complex commercial space, you have to be willing to talk about these kind of concepts. So one, collect all the information. Two, figure out where the main issues are. Three, how can we remediate those issues or make it look a little bit stronger? And four, how can we give the bank a little bit more security and control for them to say yes to the things that we want, when currently they're dealing with their direct bank and they're not willing to do the things. Now, obviously, if you're the bank that has all the control, you're much less willing to do things than a bank that's going to receive everything, right? So this is the world we live in, and these are the things that we need to talk about. And the more that we talk about these kind of things, the more you end up learning about the commercial space. So if you're a commercial client or someone that's looking to get into the commercial space, buy an investment property, or you need what you've got reviewed and you need a little bit of a review and a move across, then send me a message, send me an email. I'm more than happy to help.